Hello everyone and welcome back to the channel. I have an interesting video for you today. As we see a slowdown in the economy, it is crucial to understand the importance of growth as investors. Because if we allocate the invested capital in wrong places, we will end up losing money. So what is growth in economy? It is driven by two simple things. One, population growth, and how productive is this population or the labor force productivity. And what we see is that the productivity is slowing down the last few years. It is growing but not enough. This led government to run deficit. And like we saw in the United States of America, helicopter money, given money directly to the public in form of stimulus checks. That means there were no good produced in counterpart of receiving the money. It is literally free money. Here the important part, what people will do with the stimulus. What happened, some of the stimulus money was used to participate in the stock market. But most of it went to pay debts such as loan debt, credit card debt, which is the destruction of money. How is that paying loans is destroying the money? It's very obvious that the whole financial system is based on debt. The more loan in the system, the more liquid is the market. If more and more people pay their debt, that indicates that less and less people take in debt and thus less liquidity in the market. So what government will do is to run a surplus to compensate for the money lost in the system by rising taxes. So this is one part of the picture. The second part is inflation. And as we know from our previous videos, that inflation is purely monetary phenomena, not created by supply chain problem or greedy businesses. It is created by printing money by the Fed in form of quantitative easing, QE. So here we have to focus that QE, quantitative easing, and stimulus checks are two different things. One is issued by the Federal Reserve, the other one is issued by the government. Let me know if you have question on the comment section and I will come back to you with more explanation. So when growth starts to slow down, we start to notice that fear is increasing and investors tend to raise cash and sell equity. Plus, the quantitative easing will disappear. When the inflation is sky high, the valuation in stocks will come back to the fair value of the stock. And based on that, investor will seek a discounted cash flow method to see if they will buy the stock. And in our case, the ratios of the stocks are still elevated and need to even go lower so that cash will come back in the market. But at the moment, for this to happen, the market needs to bottom, which is not the case. With that being said, let's start covering the market. And here we go. The market performance on last Friday, the Dow Jones is up 564.69 points, or an improvement of 1.65%. The Nasdaq is up 417.79 points, or a gain of 3.13%. The S&P 500 is up 105.34 points, or an improvement of 2.43%. Let's check the sector performance. The last Friday performance, almost everything in the green except of energy and basic material. But if we check on the weekly performance of the sectors, we see the energy on the first place, financial on the second place, and third place for technology, with laggers of the week are consumer, cyclical, basic material, and industrial. Let's check the future. With the energy sector is on the green side, except of crude oil Brent, which is slightly down by 0.92%. Soft coca, cotton, lumber, sugar on the green side, coffee on the flat line with losses for orange juice. Metal, we have gain for gold, silver, platinum, copper, palladium. All the sectors of the metals are on the green side. The meat we have gains for live cattle, lean hogs, and the feeder cattle are on the flat line. For the grains, green all over the board except for losses for rough rice. Let's check the heat map. 1 week performance. 1 week performance on the heat map, we see the technology with gains for Microsoft by 4.13% and for Apple by 4.88%. This is the result after the release of earnings. For the communication service, also we see gains for Google by 2.30%. For the consumer cyclical on the auto manufacturer, we see that Tesla is down by 10.34%. The energy side of the market is green all over the board. Healthcare, we see gains for Johnson & Johnson and Pfizer, AbbVie. For the drug manufacturer, we're doing great the last week. Financial, same thing, we have gains for Visa, MasterCard, JP Morgan Chase, Bank of America. The consumer defensive are on the flat line. Losses, we see losses on the industrial part of the market and not so hard so on the entertainment service, with Netflix is down 3%, Electronic Art EA is down 5.10%, and Activision is down by 2.72%, even though we had the rumors that Microsoft is willing to buy Activision. Let's move to the chart analysis with the 30-minute time frame. For the SPY, as we expected for the rebound, after the fact we crossed the support of 335, we built a bear flag, and then we were expecting a rebound, and here we go. We crossed one more time the now resistance of 435, and we are building a bull flag. The MACD lines are pointing upward. The MACD bars of the histogram are green and getting bigger. On the RSI, we see that we almost reached overbought area. If the bulls will be on charge, we might expect a run up to the resistance of 455. If the bulls will be on charge, we would expect a pullback to the support of 435. The Qs, same thing, building a bull flag and consolidating around the 357 and the 337 dollar. So we see that the MACD line are pointing upwards. The green bars on the histogram are getting bigger, but we see here on the RSI that we almost reach an overbought area. This is indicating that the chart maybe will enter a consolidation phase and will be moving sideways. We will see. We have a lot of economic events, and according to these events, if the bulls will be on charge, we might see another leg up on the Qs. If the bears will be on charge, maybe we will see a flash down. IWM, the IWM is showing some strength. Same thing, building a bull flag. The RSI still didn't reach the overbought territory. We just crossed, and the MACD and the line start pointing upward, we would expect another leg up on the IWM. Let's check the DXY, the dollar index, daily time frame. After the fact that the dollar index had a great run, started a consolidation phase, we reached the overbought area on the RSI, and we see that the green bars of the histogram are indicating a topping, as well as the pointing line of the MACD. This indicates maybe we reach a top on the dollar index, and maybe we will have a pull down back to the support of $96. Let's check the VIX. The 4-hourly chart of the VIX is cooling down. We see that the VIX, the RSI has reached an overbought territory and start pointing downwards. The crossing line of the MACD and the start of the red impression on the histogram, all of these are indicating that the VIX will come downwards, and the next support for the VIX is around the $16. Let's take a look at the gold daily time frame. With the dollar index is topping, we see consolidation for gold around the 1790 level. If the dollar index keep on dropping and the 10 years yield will cool down and cross the support of the 177 what we drew before, as you see that these lines are not drawn today, they were been all along with us from the beginning of releasing of our videos. So if we will cross the support of 177, and the next stop is 170%, and this is an indication for gold to start building a leg higher. Gold like to see clear movement from the DXY and from the 10-year yield, and somewhat from Bitcoin to make its next move to the upside or to the downside. Let's take a look. Bitcoin daily time frame. Bitcoin was on an oversold territory, and we will expect some consolidation. Maybe they will reach the resistance of 42,000, but we should not expect huge moves, as the Bitcoiners' whales are dropping most of the time every rip. As we see on the chart, first rip strong sell, and then the next rip, and then we had the strong sell. I think the pattern will persist, so this rip will be followed by another sell. Let's take a look at individual stocks. Take a look at Apple. Apple regained the support of 167. The MACD lines are pointing upward, and the red histogram bars are getting shorter and shorter, as well as on the RSI we didn't reach a overbought territory, so I see more gains to come, maybe another leg higher for Apple. Tesla, even though the MACD line when pointing downwards are indicating somehow a bottoming and reaching an oversold territory, we see here that this bear flag will indicate that some kind of consolidation and going sideways. At the most, Tesla technically will reach the resistance now of 994, but all indicators are showing that Tesla will be in a bear market for the days to come. Finally, let's take a look at AMC. As we expected before when we were covering AMC that it will be on the $15 range. You can check that on our previous video, and here we go. AMC is trading around the $15. We see the red depression in the histogram of the MACD is persisting. The lines are pointing downward. Even though we reach an oversold territory on the RSI, maybe we will see some kind of consolidation around the $15. But for AMC, I think it's game over and more pain to come in the future for the AMC. After the last performance of AMC, there are no reason to draw lines or to try to find supports. My advice for the apes was to fight and try to regain the support of 26. After the fact that the apes lost the support, they lost the war. So what we have on the economic calendar for Monday, January 31st, we have the Chicago Producer Manufacturer Index, and we have the San Francisco Fed President speaking, as well as the Kansas City Fed President speaking. That's all I have for you today. Thank you for watching, thank you for listening, and we'll speak soon. If you find what presented on this channel helpful, like and subscribe to improve the algorithm, and follow me on social media.